Good morning students, welcome back. This is module 4, lesson 3, money market part 3. As you all are aware that this is a very big lesson, so we divided into 3 parts. So this is the last part of this module, the last part of this lesson, money market. Here we are going to discuss limitations and reforms of Indian money market. Limitations and reforms of Indian money market. First, we will see that what are the limitations of Indian money market. Indian money market is relatively underdeveloped compared to advanced market. The first limitation is the existence of dichotomy. Indian money market consists of organized and unorganized sectors. Unorganized sector is outside the control and supervision of RBI. So, it limits RBI to control over money market. Second point, lack of integration. The Indian money market is broadly divided into two sectors, organized and unorganized. There is a dichotomy in Indian money market. There are differences in interest rates in both the markets. So there is a lack of integration in the Indian money markets. Third, multiplicity of interest rates. There exist too many rates of interest in the Indian money market, such as borrowing rate of government, deposits and lending rates to cooperatives and commercial banks, then lending rates of financial institutions, etc. They hamper the efficiency of money markets. Next, inadequate funds. Generally, there is a shortage of funds in the Indian money market because of various factors like inadequate banking facilities, low savings, etc. Next, seasonal stringency of money. The seasonal stringency of money and high rate of interest during the busy seasons, that is November to June, is a striking feature of Indian money market. Next, absence of well-organized bill market. The bill market is not yet developed, so because of various factors such as practices of bank, keeping a large amount of cash for liquidity purposes, etc. Next, inadequate credit instruments. The money market did not have adequate short-term paper instruments. The instruments are still in underdeveloped state in India and do not meet the sufficient liquidity. So these are the limitations of Indian money market. Now we will see the reforms of Indian money market. Number 1, deregulation of interest rate. From May 1989, the rates were permitted to be determined by the market forces. Second, introduction of new money market instruments. RBI introduced new money market instruments. Through these instruments, funds can be raised. Next, repos and reverse repo. Through changes in repo and reverse repo rates, RBI transmits policy objective to entire money market. Next, liquidity adjustment facility, LAF. RBI introduced LAF in June 2000 as an important tool for adjusting liquidity through repos and reverse repos. Next, marginal standing facility, MSF, has become effective from 9th May 2011. Its aim is to reduce volatility in the overnight lending rate in the interbank money market. Next, money market mutual funds, MMFS. RBI introduced MMFS in April 1992 to enable small investors to participate in money markets. Next, Discount and Finance House of India, DFHI. It was set up in 1988 jointly by RBI, public sector banks and financial institutions. Next, regulation of NBFC. The RBI Act was amended in 1997 to provide a comprehensive regulation for NBFC sector. Next, the Clearing Corporation of India Limited, CCIL. CCIL was registered on 30th April 2001 under the Companies Act 1956 with State Bank of India as a chief promoter. The CCIL clears all the transactions in the government securities and repos reported on Negotiated Dealing System NDS and also foreign exchange spot and forward deals. The reforms introduced since 1991 improved the Indian money market and its functioning. So these are the reforms and these are the limitations. So in the third part of Indian money market lesson, there can be two questions. Number one, explain the limitations of Indian money market, where you have to cover all the 7 points, and reforms of Indian money market, where you have to cover all the 9 points. So students, here the lesson of money market is over. It is into 3 different parts, part 1, part 2, part 3. Thank you very much.